mechanisms of voting for both experienced crypto folks and for newbies, as well as how often we would be voting in a given quarter. If it's a weekly vote versus a monthly vote versus one time a quarter, that's going to affect participation as well.
Yes, on that point, I can give you a short answer. I think for now, it's pretty easy because you have one link to save for your account as a governor, and you can see how many algos you committed. And just below, you see the next vote, and if you voted or not, and they give you the date. It's pretty well done and simple, which I like for anybody can really get it. And I think for now, that's a question. I don't know if they will have many votes per period or just one vote. I think it will be only one vote per period of 90 days for now, but I'm not sure about that.
There's one good thing too is that I think is very important is that you don't have to be part of governance to come into the Algorand space. You can still get the 6% APY with doing nothing.
That's not true. That's going to end in January.
Oh, is it really? I didn't know that.
Yeah.
No, Algo Joe, just on that, it will not completely stop in the 1st January.
It's going to taper off through 2022.
It will stay the same until the 1st of January, and then during 2022, it will fade slowly along the year. So the reward will go slowly down.
That's right.
Yeah.
I want to give one more angle to you guys. You know, I made an argument for voting A, but I want to give you another angle about option B. One thing that option B that a lot of us really should be thinking about is that it will deter a lot of the exchanges who hold lots of algo, other people's algo, that they will commit for other people. And give rewards themselves, like Binance does, or you know, providing liquidity. So that's a fear that we should have. And with the 8% slashing, that that would deter some of these exchanges from removing that governance to provide liquidity on their exchanges. I know that's not, you know, that's not maybe not happen, but we know that exchanges haven't always been on the up and up, and we know places like Binance use other people's money to work pools and you know, possibly governance too.
Yeah,
that's just one
Thank
thought.
you. Thank you for this great point.
I believe the reason for the price action after Labor Day was due to exchange buying.
Yeah, Binance, etc., have been very shady, and we really don't know what's going on there. But I don't want to go straight up with a conspiracy theory around Binance, but yeah, there are very like shady things. I don't even know what are the algo that we are trading on Binance, since they have only 50 million algos in there, and sometimes the volume is much higher than that. And yeah.
Does anybody know if people are going? I haven't used Binance in years, but are those algo holders be able to remove their algo off Binance?
Yeah, their algo's free now.
I heard some of because there are many Binance apps. Some are free, like mine now. It's the button has appeared again, but I've read someone say that in I think Binance US or some region, they still don't have the access to the algos, but I'm not sure about that. We have to.
Yeah, I mean that's one thing. Oh, I was going to say that's one thing to think about, because if we we are going to this governance system, it's one thing to think about that they might use other people's money to sway the vote on certain key issues that come along.
Totally, yeah, that's the biggest risk. They can take control of the Algorand ecosystem basically with their liquidity.
If
Yeah,
anything,
them,
that's
Coinbase, KuCoin. I mean, there's a lot of Algorand on the exchanges that could potentially make a vote go a different way if they commit other people's money.
if anything, that's more important. Why I think B is the better option then.
Yeah, I'm definitely concerned. That's why that's where I would lean towards B, is because of the exchange power and leveraging those votes. So I don't know what Algorand Foundation is doing regarding this, but I think that social media wise, maybe people should post, hey, like get your. I mean, this is pretty obvious for most of us, but we have our own wallets, majority. But people that are not, like lay people who are just friends of friends, etc., or somebody who's not like super into it, they're just like getting it for the 5 or 4 or 6%. APY for Algorand. I feel like they should we should like do an education like blitz for having your own wallet, having your off the exchange, and just focus on that until governance catches up.
Totally.
So I don't know if anybody's doing YouTube or Twitter or TikTok. That should be a focus for next week.
Yeah, we have Monty here. Monty, hi.
Yeah,
Tell us more.
I'm doing a My Algo wallet tutorial here a little later on today. So I'll be running through creating a new wallet, and then I'll run through how to do the governance if people want to do governance, but at least get your funds off of the exchanges. So you're right. We should definitely put out some info there and do a blitz.
Yeah, we really need to share more news and more tweets about how we definitely need to take our algos to take control of the ecosystem. Otherwise, the exchanges will control everything, and the big institutions and the big VCs, and we will have no control at all as a community.
Monty, when are you posting that video?
It should be done a little later on today. Due to the algorithms, I might not actually post it until like 10 a.m. tomorrow morning East Coast time, but I should have it knocked out today.
Okay. Thanks.
We have today Benedetto. How are you, Benedetto, my friend? Can you share, because you have a very deep knowledge of like finance, and can you tell us more about
Hi guys.
your project, please?
Hi Bylan, nice to meet you all. It's a pleasure for me to hear you. I was listening you all afternoon. I was on my way home in the car. I was listening you instead of radio. So nice to be here. So guys, I am the CEO of Fox Finance. It's a money market protocol. It's being developed. We are going to announce the launch soon. So I'm all here for you to tell me any question you have. I'm happy to answer.
Can you just tell us about the genesis of the project? How did you came with this concept and your team?
Yeah, that's a very interesting story. So I work at Blockchain Italia. It's a software house, and we develop solution with blockchain. We are between the 12 first global partner of Algorand. We invested into this technology by teaching our developers to develop in Algorand more than 1.5 years ago, because we had an authorization platform and the gas fee on Ethereum was too high. And we meet Algorand, we meet Silvio at a conference, and we decided to begin developing Algorand. And this was the first project. Then we had a tokenization platform. We were selling NFT of Italian squares during the lockdown. And then 1 year ago, we were seeing the Algorand Europe Accelerator. And we saw that there were a focus on DeFi. And, it was the boom over the DeFi ecosystem on Ethereum. And we were like, okay, Algorand is not well developed yet, but yes, we can build it. And we decided to jump into this project. Why we decided to go with a lending protocol? We were doing our research and we saw that there were few DEX building on. So we decided to go for a lending protocol because it is one of the main pillars of a DeFi ecosystem. So this was our bet. And then during the accelerator, we were named Algorand. We decided to switch this in order to give a purpose to the protocol, which is Fox Finance. So it aims to be the lending protocol opened to the masses with low fees, user-friendly. So this is our purpose. And that's the story behind it.
That's incredible. Thank you so much for your work, because that's a cornerstone of a DeFi ecosystem. And yeah. Can you tell us how it works? Like how, as a basic user, how can I
Yeah,
use
so it is peer-to-peer. There is someone willing to give liquidity for the pools, is isolated pools. So basically, a Volksfinance user can deposit its crypto and earn interest over this deposit. Someone else can borrow this crypto, obviously by locking a collateral. The collateral has to be a previous deposit, basically similar how it is working our compound. And then the borrowers must pay interest over this deposit. These interests are used to repay the interest received by who is giving the liquidity.
Awesome. Any question, my friends?
Yes, I have one. Is it pure peer-to-peer?
Yes, not. I mean, it's you are lending to the pool, and someone else is borrowing from the pool. So it's not a contract between two users. There is the protocol that is intermediating this. I mean, the pool that you are using, because it works for isolated pools. So you have Algo, you deposit Algo. Someone else, I don't know, has USDC, deposit USDC. If you that deposited Algo wants to lock it as a collateral for borrow the USDC of the other user, you are allowed to do it.
Cool.
I have a question. What preventative measures is there to keep the borrower from defaulting and the lenders from losing out on their money?
We have implemented the liquidation mechanism, which allows external liquidator to liquidate loan which has gone under collateralization. How it goes under collateralization? Basically, if the collateral it's an altcoin, so it's a variable value on the market. It can fluctuate. If it decreases and it goes under the collateralization threshold, it's being liquidated. Or also, if the borrower is not paying its interest and it reaches again this threshold, is being liquidated.
Are there warnings before the liquidation events?
This will be interesting for you to see in the UX UI. It's a surprise.
Thank you. Yeah, I can't wait for it to go out. Yeah. Is it this year or next year?
So we will go on testnet by the end of the year.
Awesome. Can't wait to
But we will try to keep the testnet short. We already did our first review. We have runtime verification as auditor. Cool. And it has been a success, I'm happy to say, even if we did not share it yet. We will share the report together with the white paper.
Okay, I have another question.
Yes, please.
Can you ping me? Because we have something that will be launched shortly. And this is a perfect match.
Okay, great. I'll ping you.
See, I told you guys all things are coming.
Yeah.
I hope you believe me.
It's so exciting. Everything is coming at the right time. It's like all the lines, all the projects are converging for this summer, this winter. And yeah, it's so exciting.
What's the ETA on Tiny Man?
Yesterday, I think, right? So, any time now?
I know. I'm like a little kid at a candy store waiting for that to launch, man.
We've got Algorand.
When was this project being released?
Tiny Man's supposed to go live supposedly this month.
You mean last month?
Yeah.
Yeah, last month. But folks is the end of the year, right?
Testnet, yes.
Yeah.
So I have a question. When someone provides, let's say they put USDC in what do they get to provide as collateral? Do they get like a derivative asset, or do they just put something directly?
They get our deposit token. We have deposit token for each pool that we evaluate this as collateral.
Okay, gotcha.
Like an LP token.
Yeah.
I have a question. Maybe one of you degens know. Is the USDC and USDT on the Algorand network, do either of them have a clawback and freeze enabled?
So if if the question is for me,
I mean, sure, if you know the answer.
no, yeah. So basically, if you're meaning for the whitelisting of the token, we can whitelist.
I'm speaking of just the assets themselves on Algorand, USDC and USDT. Is clawback and freeze enabled on the actual root asset itself?
I don't know specifically for their contracts. I know one of them they haven't, and I think one it has because we were doing our stablecoin research.
So
yeah, sorry.
I know USDC does not have clawback. Tether does. So if that's what you're talking about, or are you talking about his liquidity token?
No, he's talking about the clawbacks.
I'm talking about the actual assets themselves. It looks like USDT
USDC does not have clawback, but USDT does.
Yeah. Just so you guys know, then, wait, are you sure about that USDC?
No, sorry. I just checked right now, and USDT doesn't have clawback on the Algorand.
Okay, but it has freeze.
Right? Wait, let me check. No freeze. Nothing.
So is that where are you looking, Bilal?
On Algorand Explorer.
Yeah, Explorer has that.
I'm looking there as well.
Yeah, it should show it right under the token in the
on
the Explorer.
It doesn't have no clawback, no freeze. I'm surprised too.
Oh, both of them. That's great, because just so everybody knows, like, this is information that probably you guys all know, is that assets that have those two things enabled most likely won't be allowed to in DEXs.
Well, as far as I know, it depends. If they are trusted by Algorand itself, you can.
No, I mean, so if it's more of a risk to the end users, because it allows for the asset themselves to freeze the entire pool.
Of course, but because I've been through this issue, and if they are trusted, they are like verified. Yes, you could, but I don't want to say a mistake, but 90% it's just like this.
Yeah, sure. I mean, you of course you make the decisions you want on your platform. I personally, I have mindset of, if a asset has the ability to be frozen or clawed back, they shouldn't be in a pool, because it endangers everybody's asset that's in that pool.
Yeah,
I can agree with that.
I would concur. Is there anywhere where you can use Algos' liquidity now? I mean, I guess yldy is kind of doing that, but it's not really being used, right?
I think Jelly Swap is the only actual one you could really use, and it's an atomic swap.
Jelly Swap, got it.
I just have one more detail about USDC. So USDC has a freeze address, and USDT has no freeze, no clawback.
Okay, I was wrong on that. I was backward on that then. Thanks for the clarification.
You're welcome, my friend. So yeah, so what Chris said is very interesting, because we haven't thought about it, but if pools have like this USDC with the freeze option, basically the whole pool or the whole DEX can be frozen, right? Is it something you thought about, Benedetto?
Yes, yes, but
I mean, I thought about it.
I know. So it is also. I think you can check on the Tiny Man report. There is something mentioned about it, because I remember my devs team was talking about it a few days ago. But I'm not sure 100%. But at the end, it wasn't a big mistake, a big problem if this was verified and trusted by Algorand.
Okay.
So meaning that you are trusting it by their supervision.
Okay.
Okay. So like I'm looking on here. Maybe I'm reading this wrong, but it looks like Tether can be both froze and clawbacked, and USDC can only be froze. Am I looking at this wrong?
I just checked in the Algo Explorer, but you can check again. Like...
Yeah, I mean, I'm looking there as well. So like the freeze account, USDC has an address, has no clawback account, and under Tether it has a clawback account and a freeze account.
Oh, I haven't seen any account there. Wait, am I blind?
Yeah, hey, you go to the technical information tab.
Yeah, I did, but
Right.
I don't see any address.
It says Tether.
Yeah.
Oh, yeah, sorry. Because they give the name of the... Sorry, yeah, you're right. The Tether. Oh, because I haven't seen an Algorand address. I thought it was... Oh, yeah, you're right. Thank you so much.
You know, I think the other thing to look at is a management account as well, because the asset can be destroyed if there's so freeze, clawback, and management
Wow.
are important to look at.
Yeah, that's big.
So you can't actually destroy an asset unless you own all of the asset.
That's correct.
Yeah.
So that's not a big deal. But just like so, okay, think about this. I'll walk you through this. Say somebody steals Tether from somebody, from a wallet or whatever. They then deposit that Tether into a pool. It now completely freezes the only way they could actually do anything would be freezing or clawing back that entire pool.
Yeah. Hey, Chris, how you doing? I've thought about this a lot too, and it's the case on Ethereum as well.
Chris, you actually are chatting with us. That's great.
Yeah. I'm actually the connection's strong today.
Cool.
But yeah, I've thought about this as well, and you've probably thought about it more, seeing that you're building an AMM. But I've thought about this on Ethereum. Like clearly the inherent attributes of the layer 1 and Algorand is different, but like USDC can most definitely be frozen on Ethereum. It's happened, and I assume Tether as well, and they're one of the most liquid pairs in the DEXs on Ethereum, and it hasn't been a topic brought up much that I'm aware of.
You know, I'm going to put more thought into this because this is something I have thought about a lot. I thought that the freezing and everything of that sort on Ethereum is a different process than what it would be on Algorand. So it's not the same thing.
Yeah. I may have to think about this too, because if it were in an AMM pool on Algorand, they could freeze that entire side of the pool, I guess, right, and not allow.
They would have to freeze it. I mean, you couldn't freeze only a portion of it.
Yeah. Like if it was paired against Algo, it would
right.
freeze
and
the
then
entire...
that would actually freeze the entire pool, both sides, because you wouldn't be able to take the other one out.
Yeah, that's an issue. But then, like, how would you even prevent a pool being made, right? Like, anyone can make. I guess it depends what kind of, if you let people make pools or not.
Yeah. So one thing that you could do is, if the asset itself has the ability to be clawback and frozen, and you can throw up a big, huge warning saying, "Hey, just so you know, this asset can be frozen or clawed back at any point." But I mean, so leave it up to the end user.
Yeah, they're too liquid. They're too in demand to deny them. You know, like everyone wants to trade in USDC, and I would imagine for them to actually freeze a pool would be a pretty big deal, And
yeah, I
yeah,
agree.
yeah.
But it stops it from being decentralized though.
Oh, 100%. Yeah, yeah.
Yeah, that's the whole point, to be decentralized. So that's kind of funny that we need to rely on them for our DEX to
I mean,
work.
the other thing is that the community demand of a stablecoin that doesn't have the ability to be frozen or clawed back would it's not too late. Like they could always like create a V2 of Tether or USDC that it has those removed.
Yeah, yeah. I think well, yeah, there'll be algorithmic stablecoins coming soon, which will be very exciting and yeah.
Wait, is that an announcement?
No,
Chris?
not for me, but we all know it's coming.
Right. And something that I've been actually thinking about a lot in the last couple of weeks is the clawback and the freezing aspect of it. So what we do in Reach is that we don't enable assets that are generated in Reach to be able to be clawed back and froze, purely because that breaks the math of the reasoning that we do to guarantee formal verification. Because you can imagine that if at any point somebody could just freeze the assets, it breaks any type of assumptions that you might have. So what we do is that we make sure that the assets are created within Reach don't have that functionality.
Yeah, that makes sense.
That's a really good point. Thank you.
But it's also the same thing with upgradable contracts. Like we also within Reach, because we very much are all about the math. I mean, I can definitely see the features and the reasons why I have them, but within Reach, because we rely so heavily on like safety and like guaranteeing things happen, we turn off the ability for upgradable contracts as well with Reach applications being created.
Wow. Now we've learned a lot today already. Like this is very interesting. This stablecoin consequences. Like and they have to keep clawback and freeze for regulation purposes, I guess. So it kind of be a problem.
Yeah, I mean, like I said, it's. I don't think it's a problem. Let's be very clear. It's not a problem. It's more of something that people need to understand what is going on, because people just need to know the risks and potential rewards of doing everything that they can.
Yeah.
You would definitely take like.
Oh, I'm sorry. I didn't mean to step on you there. I'm sure that the USDC, because that's a Circle product, right? And that, there's a lot of U.S. government regulation, and I think in the future they want to have the ability to freeze people's individual accounts. Like say if you're not paying your taxes or something on your crypto. I think that's why that's written into that like that. But it would be really beneficial to the decentralization of the community to have that where they have no fear to be able to invest in something and be able to hold their money themselves. Sorry, I didn't mean to step on you.
It's all good, bud. And I would say it would take like a pretty major event for probably them to like exceed that far. Like something like that poly hack or something like that.
Yeah.
Agreed. I think it would be one of those things where if they did it, it would have to be a really good reason, especially if like the funds got into I think probably what would end up happening if I just think about the mechanics of the pools. If I was the king of Circle, what I would do is rather than actually freeze the pool, I would analyze the transaction of the Circle that went into it, and looked at the account that had the liquidity tokens that put it in, and as soon as they took it out, automatically freeze it when they took it back out. That's probably what I would do.
That sounds like a big brain move.
Yeah, definitely. It is a big brain here. Yeah. Wow.
Yeah, that was. Yeah, so like that was just my main thoughts around the clawback and freeze and how people were thinking about handling those things. Because this is stuff that we're actually actively thinking about building the decks. And my gut feeling is big old warnings, because obviously USDC and USDT is one of the most sought after pairs that would want to be out there, and the ability to actually use those to detect and say, hey, by the way, if USDT or USDC decides to freeze this, it could freeze the entire pool.
So that means basically there is no complete DEX, like literal DEX, unless we have an algorithmic stablecoin, right?
No, that's not true, because I mean, as decentralized exchange, the exchange itself is decentralized. It's just that the assets that are part of it are, it's still decentralized. Anybody could launch the pool. Anybody could actually, trade from the pool. It's just that there is, as far as the assets, if you choose to trade in an asset that can be clawed back, I mean, it's your own decision. And like everybody said here, the Circle or USDT to decide to actually freeze or claw back would be a pretty major thing.
Yeah, I get
So
you.
So if Compound had a clawback, they wouldn't be in the situation they're in right now. Did you guys see that? Where Compound sent out $90 million in extra coins the other day. 90 million.
I thought it was funny when they were, well, like that's literally months ago that the CEO was like talking about how code of law was so important, and then next thing you know, he's doing this.
Right, now he's a hypocrite. Now he's like, yeah, give me my crypto back. I'm going to threaten you. I'm going to tell the IRS that you actually made money, but you were supposed to make money anyway. You were always supposed to be reporting. So.
Well, BlockFi had the same thing when they gave out a bunch of BTC rewards by accident.
That's right. So we've seen that a few times. I mean, I guess, maybe it's a feature, not a bug, to have the clawback occasionally. I don't know. I got to imagine China, when they come out with their CBDC, they're going to have that clawback, and they want that control. So it's not unusual for governments to want to have control over their currency. And it could be a bad thing, right? I mean, Bitcoin was founded essentially for decentralization. But if governments come in and have freezes and clawbacks, then it could have the exact opposite effect. They could actually have more control over, all the currency than they did before.
Do you guys, know if Algorand has any plans to offer a decentralized algorithmic stablecoin that is censorship resistant? The discussion on Tether and USDT kind of got me worried a little bit.
Soon, my friend.
I mean, Algorand themselves most likely wouldn't launch one, but somebody building one on top would.
That would be great.
Can I ask about that?
And they would be anonymous.
Yeah, regarding like a stablecoin pools on TinyMint, would you like have some that are secluded if they were to use Tether, etc.? Like people would know that, hey, like this pool is gonna have X stablecoin and it could be clawed back. Would those be put into separate pools, or would you just not take those in?
So, I mean, just how like AMMs work is that they work on pairs of assets. So what you could do programmatically is through the interface detect which assets that you're trying to actually trade on, and throw up a warning that says this asset is freezable or clawback, so that the end user would know what they're getting themselves into.
Great.
And this is really only for liquidity providers. People are swapping, are just interacting with the contract, and then they're out of the whole system. So this is more people just providing liquidity.
Just technical details, my friend. We can only have 12 speakers. So when I remove you, it's just to give someone else the right to talk, and then you can request to talk again. Okay?
Yeah,
go ahead.
Yeah, you can remove me.
Go ahead and remove me.
No, it's fine. It's fine.
I need to go.
We are fine. We have no other requests, but yeah, just in the future.
Yeah, drop me anytime.
Should we go back to the governance?
Team players right there, like drop me, coach.
No. Should we go back to the governance like theme? What do you think?
Guys, I take this break to say you goodbye. I'm going out. It was a pleasure for me to talk with you.
Thanks for joining.
Wait for the next chat.
Yeah, thanks for
Thank
joining.
you. Thank you
Hi,
very
guys.
much, Benedito.
Bye-bye.
We can't wait to try the testnet soon.
Yeah, I'm definitely psyched about your project. Thanks for coming
Thank
in
you
and
so
talking
much.
about it.
Thank you, guys. Thank you.
Oh,
Looking
yeah.
forward to be grateful and show you the best that Volks Finance will do. Bye, guys. Have a good day.
Bye.
Bye, sir.
So, do we have any attorneys on that can tell us about the governance declaration that says, hey, if you are in the United States of America, you can't partake in rewards? Anybody got any kind of legal background?
That is insane. That is so sad.
I'm just going to say what they don't know can't hurt them.
Hold on. I can't tell if you guys are serious. Wait, that's legitimate now?
That's legitimate. Yeah, it's a clause in there. I'll post it in the Twitter chat, but it's in there. I mean, they never took it out.
Can someone give a breakdown on like what exactly that means? Someone asked me about it, but I didn't know. Yesterday was the first time I'd heard about that.
I will post it in the chat here so we can take a look at it. But it's lengthy. I don't want to read the whole thing.
Thank you. Yeah, I remember we talked about this morning, and I remember in 2019 when we had this super reward program. I subscribed because I was in Australia, so it was open for Australians. But the US citizen couldn't subscribe in it, and it was like a big deal because, like, I think it made very many US citizens unhappy about it, and it was kind of sad.
All right, I changed my mind. If you guys want to hear it, I will go ahead and read it. I think it'll only take a few minutes.
Please, yes.
Yeah, go ahead.
Thanks.
So, notwithstanding anything contained herein to the contrary, you specifically acknowledge and agree that trading and/or transacting in Algo tokens may be prohibited in certain jurisdictions, including without limitation, United States of America and its territories, Canada, Democratic Peoples of Korea, yada, yada, a bunch of other stuff. Next section, it goes, specifically with regard to the United States, you shall ensure compliance with all applicable laws and regulations which prohibit or restrict the trading of Algo tokens in any form or manner. You are neither residing in the United States of America nor a U.S. person within the meaning of Regulation S under the United States Securities Act of 1933, as amended, a U.S. person. You shall not enter into any transaction or arrangement with the effect of selling or otherwise disposing of any Algo tokens, incentives received under any foundation program to any U.S. person or any person in the United States of America.
Whoa.
You guys, I mean, the key is a lot of that said, it's all based on there actually being laws and regulations prohibiting it, which there are not. The language is pretty specific there.
Yeah, I definitely agree with Patrick that it's you at first read you think it's concerning, but then I really think it's FUD. Like I really don't even think it's going to be a big deal at all.
No, it's not. It's CYA is what it is.
That's what I think. I think it's CYA. That sentence, you shall ensure compliance with all applicable laws and regulations.
Bingo.
Well, that's the portion of it that I would key in on it as well.
CYA meaning cover your ass?
Yes.
Yes.
Okay. Yeah, that's I totally agree. It's like they have. I mean,
I was sorry to admit, I know this was brought up before. Arguably, the entire governance mechanism and participation rewards going away is actually part of concerns of pending legislation, because you, in a sense, are no longer receiving rewards for quote free. You're actually having to provide a service in order to receive rewards, which is very different.
Yeah, totally. That's why we vote.
And doesn't that bring it
and
to
that
like
and that's why you lose your money if you don't vote.
You don't technically lose your money, you just don't get money.
No, well, if option B is chosen in the subsequent periods, then you would lose 8% of your commitment.
Hashtag vote B.
Yeah, that's what I meant. You wouldn't be rewarded. You wouldn't be rewarded because you didn't provide the service.
Well, no, I mean, option B, you actually lose 8% as well.
So I have a question. If U.S. citizens can't participate, what if there were a corporation outside U.S. that all participants were shareholders in? Would they be able to participate?
You got to get really careful with foreign, because then you're talking about foreign holdings. Crypto is kind of a gray area. Then now you're talking about foreign, you know, basically then you're talking about like foreign assets held as known as considered property, but held by a foreign entity. That'd be risky.
So, Patrick, theoretically, if we were based in the U.S. and regulation was coming down the pipeline, would you recommend that U.S. citizens vote on B?
I can't speak for anyone else. I mean, unless option A and B, I see like so many different angles for each. To be honest, I think it was pretty interesting that it was a pretty fantastic first vote, because it's not that obvious or that simple of a choice, really, if you think about it. And so the fact that there's so much discussion around it, I think is awesome.
How are you voting?
I haven't decided yet, to be honest, because each one I think favors. I think it's almost like a time preference. I think you could argue. There's people who are arguing A is better for whales. There are people who are arguing B is better for whales. I mean, B pushes up to get more algo faster, but then lowers the amount of algo for subsequent periods. So you get less reward for those periods, unless there was a lot of slashing that then went back into the ecosystem for later periods, but possibly in other ways. It wouldn't necessarily go to governments; it'd go to the AERP, which might just go out as grants, or participation rewards again. So it's not that clear cut. I mean, I think the fact that the slashing mechanism, I think there's a fair point that probably impacts the little guy more. People with more money to invest, it's not, they have more money to not worry about, I guess you could say. Like, it's not an impact to them, so they can just throw a bunch of money at it and forget about it and earn a bunch. Like, they're not going to get slashed. Whereas someone who is trying to get everything they can out of what they have, they're going to try to go all in, but something might come up and they need it, and then the slashing could be pretty significant for them. So I think it would probably impact the little guy more for B. And anyone who is just looking at it as pure gains, particularly if they see Algorand cranking in the near term, B is probably a better choice. But it hurts some people potentially.
The one aspect we were chiming on is that the exchanges, how would B affect the exchanges and their liquidity, and if they would be preferential to using their token to vote for B, because people they don't have custody or they don't have ballots, and if the exchanges could leverage that in their favor. And
I think that's assuming the exchanges have algo in the first place. Right? I mean, part of the blocking stuff in some ways is they don't want people to even withdraw. But as far as them participating, there's no reason they couldn't just have a crap ton of wallets, and then it's just a matter of a numbers game. And they could spread it out across 800 wallets or whatever. And if some of those get flashed, who cares, as long as they're making a bunch of there. So they're just trying to determine how much float they need.
Yeah, we're saying that if we could go like as crypto Twitter, Algorand Twitter, just basically let people know that we want to get the algo off the exchanges into your wallets for governance, that would help.
100%. I mean, like if you wanted to, that's the thing, is if you really want to take exchanges out of the equation, then don't keep your algo on the exchange. I mean, that's the easiest way. Option A or B, it doesn't matter if your algo isn't on the exchange, then wield the power.
Yeah, the super super obvious point is that the people in this chat right now are probably everybody has like multiple wallets, but the regular lay person, you know, like family members that you said, hey, buy some Algo, they have it on an exchange. You know, those random people that are not super into the ecosystem, they're just, you know, superficially have some for the 5%, you know.
Yeah, but I mean, if someone has 200 Algo on an exchange, I don't think it really is a matter in the grand scheme of things, right? I think it's more the people with a legitimate, significant amount of Algo who keep it on the exchanges. I mean, to be honest, there's some truth to. I mean, while a lot of us might have hardware wallets and, you know, multi-sig, all kinds of things, there's some validity to even whales having stuff on exchanges because it's just easier to deal with, particularly with, you know, continuity, family, things like that, when you can just have someone sign in as opposed to knowing about, you know, cold storage and, you know, stand to metal keys buried, you know, littered across multiple locations in the country, things like that. I don't know, but I think, yeah, we just need to get people to get stuff off the exchanges. Then they lose their power, and then they lose their ability to even trade against us, or forces them to lend, you know, to borrow from the foundation.
I'm dying to hear Lev speak.
Yeah, hey, sorry, I took my hand down. I actually had a question about those terms and conditions. I was searching for them and I couldn't find them, and then I located them, so I pulled my hand down. But I mean, I do still have a bunch of questions on the whole relay node question, but I got to the chat late. I don't know if that's already been discussed before I got here.
No, you're welcome, my friend. Who can answer about the relay node and participation node? I think Patrick was huge on that. Patrick, can you go
Yeah,
on
I
there?
can talk about nodes all day. What's the question?
So I guess I'm just wondering about the, you know, I don't know if I can even articulate it that well, but essentially my understanding is there's sort of like different layers. When you're looking at the centralization or decentralization of any given blockchain, there's different layers. There's like the network layer, et cetera, the consensus layer, et cetera, et cetera. So what it looks to me is like we've got a pretty decentralized consensus layer because we've got these participation nodes that are easy to operate and anybody can fire one up and participate in consensus. But when it comes to the network layer, it's limited to this core group of whitelisted relay nodes, right? These like super powered relay nodes with gigabit up and down symmetrical internet connections and lots of storage for archiving these large blocks in the growing blockchain. So we have this sort of like decentralized model, but on the network layer, it's pretty centralized, right? Because the foundation controls it. And that's really the functional layer that gives Algorand all its blazing throughput and high transaction per second rate. So I've been and I'm, you know, posting on Twitter and speaking with Chris and other folks, just trying to figure out what is the roadmap for going from the current like highly centralized network layer to a decentralized layer. How does the foundation like not become the single point of control for the whole relayed node structure?
Yeah, I mean, so there's a lot of points there. I mean, first of all, there's nothing centralized. The only thing I would say, the only thing actually centralized in a sense in the protocol as it stands today is the fee sync. And you know, as it is today, if Algorand went away in some case, in one way, you know, then the fee sync effectively becomes a burn. So all fees right now go to the fee sync. They can only be spent in the code itself to the participation reward pool, but there's nothing that makes that automatic. So that is one of the few, like, quote, centralizing functions that's there that in, you know, 6, 7, 8 years or whatever, they'll have to put some sort of automation in that, or just switch the fees to go to the participation pool directly. In terms of relays, technically the Algorand node, it's the exact same code. There's no like relay node versus participation node like you're doing different install or anything. It's just the exact same code. It's literally just a flag in the config file when you start it up, basically saying, am I a relay or am I not a relay? And then if you're a relay, you specify a listen address, and relays are also required to be archival. If you're not a relay, then it's optional. You're either archival or not archival. And then every node can participate in consensus. It just depends on whether or not it has a participation key or multiple participation. You could potentially have 100 participation keys on a single node if you wanted. Relay nodes that are running today do not participate in consensus. More are by choice, because it just doesn't make sense. It wouldn't be wise security wise, because they are known. They have to be. They're public and they accept inbound connections. So to expose participation keys would just be not wise. In terms of the foundation controlling the relay nodes, there really isn't. Like I could start. I mean, like I could talk to. Let's just say, for safe example, I had tons and tons of stake, and I had lots of friends that collectively we had the majority of Algorand. We owned it, even around the world. Then we could set up relays of our own, and just say, hey guys, let's all talk. Let's all set up our nodes to talk to our relays, and switch up to and so now your participation keys are talking to your relays, and you could basically take over the Algorand relay network and move it all, and there's nothing that can be done about it. So that it's decentralized at the networking consensus layer. All Algorand controls, all the Algorand Foundation controls, is a DNS records that is just a default bootstrapping mechanism for the node. That's it. So like when you start up a node, you can define what relays it connects to via a phone book JSON file, via command line parameters of a list of relays. And then what also can be in the config file is a DNS record to hit as well. And so if nothing is defined, then it defaults to a foundation controlled DNS record. But that's all it is it's just like a fallback of, you have to find, like, who do I talk to initially? And every chain is going to have some mechanism for that bootstrapping, always. So a lot of chains, in some cases, I think Avalanche, it's literally hard coded in the source code. Like which nodes it connects to is hard coded in the code. And I forget like what it is. I haven't looked in a while, like Bitcoin Core, where it pulls from. I think it pulls from DNS records as well. But there's always going to be some kind of like, who do I talk to that's a quote trusted source to initially connect to, and then on other chains to potentially then find other peers to talk to. Whereas Algorand, it's like, I need to know my list of relays, and then I will randomly pick those to gossip amongst and potentially switch out as I go. But the key is anyone can run relays. Relays can be added at will. And the foundation has also announced the intention that they will maybe have two lists of like a quote their current super high performance network, and then you committee run nodes, and then you would be basically talk to both lists. And then it's just a matter of how they make it so people could add to that and get added to that bootstrapping mechanism. And then technically that could go on chain just the same way participation keys are. And I'm talking a lot, but there's a lot to cover. And then finally, in terms of the actual requirements for relays, it really isn't bad. Compared to a lot of other chains, Algorand is extremely efficient. I've run a number of nodes just in my laptop in parallel and done comparisons of like disk IO, space per transaction, network IO, and Algorand just pretty much smokes everything that I've tried by a lot. So as far as relays requiring like gigabit, like anything, like any kind of cloud hosted service, like if you're running and any of the big providers anywhere in the world, a gigabit connection is like bare minimum. You can't even get smaller than that. And you can go up to 20 gigabit, 200 gigabit. You can go way up there if you start paying for it. But it's not a big deal in terms of the requirements, particularly compared to things like Solana, or even actually at this point even Avalanche. But I don't know, that's a lot to cover. That answers some of your questions, Lev?
Yeah, I'm not like technical enough to really grasp the implications of all of that. Was super helpful. I appreciate taking the time to spell that out. But I guess I'm still not seeing. So to run a relay node on mainnet, I mean, I get that anybody can potentially fire up a relay node, but to actually have it join in mainnet requires some sort of permission, right? To get that DNS
Today, yeah. Well, but as a default, yes. You could tell, like, hey guys, I have a relay. Add it to your list of relays to talk to, and they could.
Right, and
but you'd have to.
That would be the foundation that maintains that list, right?
Right, but they did have this kind of like beta thing where like, hey everybody, we're gonna open up more relays. We want to know, submit a proposal for what you think it's gonna, for what you want compensated. You know, if you're gonna run relays, how much do you want in compensation? And they wanted to collect that data, and then they were going to take that data. I'm assuming it'll probably, factor into governance at some point, right? And then determine, okay, like what are people really expecting to get paid? Like I just did some kind of like, back of the napkin sort of calculations, and I figured it'd be about, if you were just in a like AWS or Azure or Google or something like that, you'd probably looking about $800 a month to run a relay, and that would just be a single relay with not a lot of redundancy.
There was an AMA with Shai and some other folks where he estimated it was somewhere on the order of 20,000 a year for the internet connection. But he was saying that's the order of magnitude. Yeah, somewhere between probably in the tens of thousands annually, 10 to 30 or something.
Yeah,
which is a pretty good chunk. And if the foundation is paying for that, I can totally see a model in the future where if there's enterprise adoption, you've got enterprise folks operating the relays and maybe sucking up that cost because it's a worthwhile business expense. But I just haven't seen a clear roadmap from how we go to where we are now, because we can't just let anybody operate a relay because it'll bottleneck the network.
No, I wouldn't. I mean, like the intent is like basically relays have to scale with the participation node count. Right now, there just aren't that many participation nodes. There's like 1,100, 1,200. It varies quite a bit. So basically, you just need enough. You need enough relays to be able to handle your participation node. Then you scale with that. I think the default inbound connections on a relay is like capped at like 10,000. So it'd be 10,000 nodes per relay, and that's honestly kind of small. Like networking wise, 10,000 connections isn't a big deal. Like there's web servers where a single process could handle like 1 million connections. But I think long term, I think it just gets more interesting that when you have capped coins, and there's interesting discussions about that, like where you have uncapped coins, and your inflation basically is your reward mechanism. I think it does get interesting that when you have capped coins like Bitcoin or Algorand, when transaction fees are the only thing that are the only way you have to funnel income in a sense back into the system for rewards, what happens? I think for Bitcoin, in order to pay the miners, that will mean very, very, very expensive transactions. But then the Bitcoin maxis will say, yeah, who cares if Bitcoin is, $1 million a Bitcoin? Who cares if it costs $2,000 to send it, right? But for Algorand, I think it just comes down to how many transactions. If we're doing 46,000 transactions, capacity, and say it's doing 20, 30,000 transactions a second legitimately, that's a lot of fees. So it'll be interesting to see how it plays out.
Yeah, appreciate that.
Great explanation, Patrick. You really killed it.
Thanks.
Yeah, that was a very deep explanation. Thank you so much, Patrick. Like, we really need that type of input with Chris and yourself and other members of the community. It's amazing. Thank you.
I'll just say it's like what people I don't think respect is how difficult it is for proof of stake chains to release their Genesis coins. And I think that's the hardest thing to balance is, you have all these coins created in Genesis block. How do you release those over a period of time in a balanced way so that a lot of people will get them? They're spread out. They're not tightly constrained and focused to specific individuals or enterprises, while also ensuring the security of the chain, because the security of the chain is based solely on stake, and the creators who have the most to lose and have the most invested in it obviously want to see it stay secure. So they need to have controlling interest for a while, which the foundation and their backers clearly do. And it's a matter of how they then slowly leak that out from their control, while and still ensuring that everything is functioning properly and that it's being distributed well, so they can slowly draw down their stake. It's like really, really tough, right? And then yeah.
Oh no, I'm just wanted to add on that. Like, do you see that as a direct reflection of the outside retail person thinking the tokenomics suck?
Yeah, I mean, the crypto is just insane. It's completely irrational, right? It's like there's so many different like interests and for different reasons in crypto. Like there's people who like, I want to take my $100 and win, buy my magic moon coin and be a millionaire next week. And why didn't it happen? This sucks. Then there's people who are just like hardcore geeks and nerds about this stuff who just kind of geek off in the tech, who see like the future potential of it, and that stuff just doesn't matter. And it's just really difficult because I think most people buying crypto don't understand crypto at all. I think a lot of people who actually are buying crypto don't even use it. It's like the people who are buying, the majority of these coins don't actually use them because in some cases we know you can't use them. They don't actually do anything yet people are still buying them and they're in the top 10. So yeah, I mean, it's tough. I think that's what you're fighting against. You're fighting against people who are just hardcore traders, who want to trade on leverage or short it and pump their bags, who don't really give a crap, who are going to say, they read on Reddit that, oh, the tokenomics suck. They don't even know what tokenomics mean, but supposedly they suck, so they'll just repeat it. And because if it somehow magically explained, didn't do exactly what they wanted, which was, do 1,000x in a week, then it sucks, and it's hard to talk about the complexity of proof of work, like forcing actual real money to be spent for a coin. There's interesting aspects of that. Whereas proof of stake, you're trading like the efficiency of transactions for the complexity of distribution, and keeping it fair and safe. It's really hard stuff.
Ibu, you want to add something?
Yeah. First of all, Patrick, love the explanation of the nodes. That was something that when I made the response video to Coin Bureau.
Don't get me started on that guy.
I talked to Pablo Yabo from Rand Labs in the past few days about the relay nodes. I asked him about it, and like what the foundation and the people in the know are trying to do about the problem. Not really a problem, but basically he explained it. And correct me if I'm wrong, but he just said the relay nodes are not actually they're only to make the network fast. They're not a centralizing point. The participation nodes are what host most of the data. And he said that the foundation, Algorand Inc., Arrington and Borderless all have put forth proposals to think about what they're going to do about deploying more relay nodes over time, and going to continue running current relay summer, and then I think they'll have the plan set for the next step of relay nodes before then. So we as the community and users don't really need to think about it probably till Q2 2022. You know, we'll probably start hearing maybe some whispers about the plan in Q1. And I think in Q2 they'll start to maybe propose governance or do something like that. Because he said that he was running his nodes till at the minimum July next year. The other thing I wanted to say when you were talking about tokenomics was he also told me that the accelerated vesting is going to end in 2 weeks if the price maintains this level. I just find it really convenient that the accelerated vesting is ending basically the same day that the governance period is starting. Does anyone else find that a little,
No, there's a lot of
just like
misinformation
really
about the accelerated vesting, like a lot. Like people were saying 60 million left. There's 247 million left in the early backer escrow accounts.
I mean, I'm just going off what Pablo told me that it's going to be done in 2 weeks.
Yeah, but I mean, it's solely a function of price. So it's just the fact that it makes sense that everyone, you know, I mean, people have been waiting for the governance for a long. I certainly have. I've been talking about it for a long time. I mean, there's certainly a huge, you know, boost mechanism going into governance that, you know, once you actually get even some type, even though it's not a true lockup, any kind of lockup mechanism, even if soft, it's an encouraged lockup mechanism. That's fantastic for Algorand because it's never had that, and that's certainly been one of the FUD points. So I think that's certainly helped drive up the price. Plus the fact that so much stuff is actually finally going live has been huge. So as we've gone above that max 30-day moving average, then the accelerated vesting kicks in. Then just as designed, it's purely algorithmic. I mean, so it's just, you know, based on the percentage over it pumps. It's
totally.
I don't know. I think it's working out well. But if you think about it, people would always FUD about the early backers and all that. I always argued that, you know, in some ways people say, oh, they're all selling. It's like, look, you know, if anything, they're somewhat incentivized to periodically put their fingers on the scale a little bit and get the price up so they can get their algo faster, because they don't earn rewards. Like all the escrows don't earn rewards. When they withdraw and they receive their amounts each day, that's when they first literally receive them. So they can't earn rewards until they actually receive them. So you would think that they might want to receive them faster. So like if you have, you know, 20 million algo or 100 million algo or whatever, you know, depending on early on when there wasn't that much volume, you could throw even just hundreds of thousands at it, no big deal, and get the price up and potentially get your algo even faster. So I don't know. I don't think it's that clear cut for people, you know, thinking that these guys are selling. Just because you receive algo doesn't mean you want to sell. And a lot of these guys are as big a bulls, if not more, than most of us. I mean, after all, they invested in the white paper, you know.
Yeah, I'm not saying they're selling. I'm actually saying the opposite. I think I'm wondering if there was some type of coordinated plan to have the vesting end at this specific time right before the governance starts, and whales got together and were like, we're gonna buy it on this week, and then for these 2 weeks we're gonna let it drop, and then we're gonna bring it back up so the average keeps going up. And you know, it's just very interesting how the accelerated vesting is targeted to end basically right when the governance starts. That just seems so convenient to me. It seems like overly convenient to me.
So far everyone's numbers, like those numbers have been totally wrong. You know, I mean, I think if anything, if you want to talk about manipulation, this market, you can always the fingers point to Binance. I want to say that there was a night in the Algorand price Telegram channel where I think someone was like, "Oh, Binance is down," and Binance is down for like 15 minutes, 20 minutes, something like that, like down hard. The Algorand price shot up like a rocket for those 15 minutes.
Yeah, I mean, there's definitely, I think exchanges are probably running out, right?
Yeah, I mean, like there's lots of times where
supplies at this
Binance will halt withdrawals because they don't have any to send. But yeah, I mean, as far as the amount remaining, by the way, I'll usually I just wrote a quick script to just iterate every like relay count and the collector balances, and so I'll post like the remaining amount in my Telegram channel each day, just kind of a random time, usually just whenever I'm on. But when I know that there's been when the polls have happened, I'll go and check. But what is interesting is there is a wallet that I check a lot. I think Darren tweeted about it, that has not withdrawn at all. Because like normally they every single day like clockwork, they pull from these escrows, and this particular account has not pulled at all for 7 days. And this one account alone has 68.9 million algo in it.
And that's the foundations?
No, this is an investor.
Foundations is like billions. Yeah.
Yeah, the foundation doesn't. Yeah, that stuff doesn't move. Short of like they're like grants and things like that. But that's all part of the transparency reports. Yeah, this is one of like if you just search like Algorand Foundation wallets, there's a link that ends. It's called. It's algorand.foundation/updated-wallet-addresses. And that's the list of all the foundation managed account addresses. So it's the participation reward accounts and then all the relay node runners. And it says distribute over time. So it's a list of like 62, 63 accounts. Then it has all the universities listed there as well separately. But all those relay accounts are the actual like smart contracts that are the escrows. So basically, there was the initial distribution of for their investment. Then there was a 25% boost for the EIP proposal to keep them, to lock them up, and that's what created the accelerated vesting stuff. And so you'll have the deposits in for those amounts, and then every day there's the pull. So basically, when all these balances are zero, then it's all out. And then it's just whenever they pull each day, it'll be like the fixed amount basically, for going across X years based on how much they get, it's this amount. But then when the acceleration kicks in, it's like huge. Like the account that I was watching, they get like 96,000 algo a day without acceleration. And for a while they were getting like, on one day they got 13.5 million algo, that one account, instead of 96,000. But I mean, this is like one of the absolute largest that I know of out of all those accounts. It is the mega whale of the investors.
So you're saying one wallet has 69 million algo in it and it just hasn't moved?
It has not. This is the escrow. This is what they pull from to receive it. And they have not pulled from it for 7 days, which is very unusual.
So they just want to hold, basically.
Well, I mean, the only thing, I guess
they could be on a yacht in Italy.
Well, the things like well, it should be automated, to be honest. The other possibility is, frankly, is that they can't handle the tax hit. They may have like reached a peak of like, we can't. This is going to be a problem for us taxes because they're receiving income like each of those days. Like they went from 96,000.
January 1. He's waiting until January 1.
Quite possibly, yeah. I mean,
Or
so
she.
like if you're getting 96,000 algo a day normally, and now all of a sudden you get 14 million algo in a day, and the price of algo has gone up like 500-600%. That's a big difference tax wise. So they may have been drinking from the faucet, and it turned into a fire hose, and they're like, whoa.
That's funny.
So that's a possibility. The other possibility is I believe it's like you're not going to get this information. Is it wouldn't surprise me at all, and I would expect it, that there are conditions for participation. It's like they have to run nodes, and for all I know, maybe they get kicked out of the program, right? But I mean, this is all just conjecture and guessing.
Like they haven't met the requirements,
right?
I don't know about you, but if I was getting 96 million, I would definitely
96,000 algo a day.
Yep. Remember, these guys invested like tens, hundreds of millions of dollars.
Each relay node is getting 96,000 a day.
No. If you go to that list of accounts, right? Like I'll pick the first one, this KF7X, whatever. It's all based on how much they invested. This is literally the payback for their investment.
The early investors.
Yeah, this is like, if you work for a company where you get stock options and your RSUs or vesting and stuff like that, this is basically the payback for their investment, vesting in a sense on a daily basis over 5 years. And then the acceleration lets them get that investment back sooner, but it's still the same amount, the same investment that they were promised, basically what they bought into. So the difference is that like each account, it depends on how much they invested, right? And like the first one on the list, their normal draw is 2,000 algo a day, right? So I mean, the investments and how much each of these backers invested and what they're getting back varies significantly. So the one I was quoting is like by far, I think, the absolute largest I found out of all of them. So it was probably some, a group that actually invested, right? Where there was someone who led an investment round and then had tons of people then invested with them. And it was all, done as a single book. Because I'm sure I think I've done it before, actually. If you go and look, people will misinterpret and say, oh, look, it's going to all these wallets. They're selling or this or whatever. In reality, they could just be distributing to their investors. But also that one huge quote whale account, the vast majority of the algo just goes to a participation key that doesn't move. They run a participation node, and the vast majority of that stake all just goes to that participation key.
Does the address start with Silvio?
That'd be fantastic.
I have one other question while we're on this topic. What happened with the early backers and how, the foundation, or I don't know if it was the foundation, but they bought back a significant amount when it dumped. I don't know, I think it was like 379 or something, or some pretty high number. Do you see a lot of those folks getting back in when it gets up there again, or when it gets to the $2.50, $3 range?
Oh, well, I mean, you're talking about like there was the Dutch auction, and the people who bought in the Dutch auction were able to get a 90% refund. And
right.
Then that was all returned and burned. So
those
they
were
didn't really
burned?
lose much. Yeah, they were burned. They basically, Algorand has a write-up on like how they generated a random number basically, and sent to that account for which they never had the keys to. So it's still like the block explorers would have to exclude that account address. So it's technically quote out, but it's technically burned. It's an address that no one has the keys to.
Unrecoverable.
Correct.
Interesting.
Since then, no burns since then, and I guess in theory the foundation, or we could vote for burns, but I wouldn't counsel. I wouldn't want burns in the future. Do you have any particular?
No.
Yeah.
I mean, there's people who like kind of in the same way people who say tokenomics suck and just don't while saying that don't understand them. You also have people like, hey, Algorand should burn 5 billion algo or whatever. Right? You know, they just think that it'll just magically like somehow make basically they want the price to go way up. They want like, well, I didn't get my magic moon coin. If you just burn algo, then it will magically go up, of course, right? They just don't get it.
Yeah,
Yeah, they don't get that their algo will be burnt as well.
You know, or that there's coin with like 100% inflation in a single day and it didn't matter.
So
right.
When the team like put together the white paper, I mean, I haven't read it front to back, but my question is kind of like this. Is there like somebody that did the game theory on like there being 10 billion tokens and the usage and the fees, like having a perpetual system where, you know, we would be paid back by the low transaction fees and the network would expand usage and that would kind of perpetuate the network too. Like I've been using, like I've used Ethereum, Solana, etc. Like I just didn't find the convenience of buying NFTs or using yldy, etc. Like I feel like I've actually found an Algorand where I'm actually interacting with the coin as opposed to just holding Bitcoin or whatever. Like I'm actually using Algorand, and I feel like if the user base expands and you know the tokenomics and the total game theory in the end, is it make sense? I don't understand the burn mechanism. I don't know why it wouldn't make sense to me on Algorand, but isn't that where the utility of the coin and the price would follow? You know, what more utility, more usage, that's when the price of the coin goes up. That's the bottom line, right? As the network grows.
Correct, sir.
Yeah, 100%. I mean, I think there's like, go ahead. Sorry.
Well, I mean, sorry I want to hear Patrick talk about this, but you know, they have a team of economic advisors. A lot of them are professors that have been in the space for 20, 30 plus years. I think they have a good sense of the direction of the protocol.
They even have Nobel Prize.
And one of them won the Nobel Prize in economics.
Yeah, Nobel Prize. Yeah.
I mean, yeah. I mean, but just not even that. I mean, there's several people that are very, very well qualified.
Yeah.
When they map this thing out. I mean, but I don't know that I'm just kind of throwing that out there.
Yeah, way more qualified than myself. That's for sure.
Well, I mean, I want to make this argument. I think I spoke to Bilal about this before previously. But basically, if I'm not an expert on tokenomics, etc., but if the release, that Dutch auction went smoother, and if it wasn't the timing, during that, that little bounce in the crypto winter, I feel like Algorand would be in a very different position. I feel like once people, grasp the convenience and the efficiency of the network, I think it's gonna, there could be like a snowball effect of mass adoption. But
yeah.
Again, I don't know. I think it's not too soon.
I even think it's starting right now. I think it's the beginning right now. It's the perfect moment. It's like everything is converging for the big rise of Algorand.
Yeah, but what Patrick was saying is that basically the way that they distribute the coins, it's like if you distribute the coins and it's like all centralized to 100 holders. There's 100 million tokens and everybody has 10 million tokens or whatever. It's like more people, more wallets, more spread out. That's when adoption can be, it can be accelerated. If we have a few people holding the coins, that's the issue. So a fair distribution is the biggest. And if we can do that correctly, that's when you can really, see it.
I mean, I would say, I think in some ways, probably the best distribution mechanism is kind of what ETH is doing. I mean, like ETH to ETH2, basically having proof of work that then transitions to proof of stake, I think is kind of like, I mean, a great way of going to a proof of stake based mechanism where the coin has already been distributed over time and based on, direct market and energy input. But at the same time, I always say in the channel, like ETH is dead to me. Like anyone who has utility tokens on Ethereum, it's unusable. I'm just kind of gobsmacked, to be honest, that people use it. I kind of engage someone on Twitter. I don't like to do it too much, but we know, talking about someone, the 24 million or whatever is sent in USDT, the fee, the accidental fee, would point out that the normal fee would have been like $175 just to do a single USDT send. And it's just, it would be 0.001 algo, period, on Algorand. It's just night and day. And so when you actually use Algorand compared to Ethereum, and you have the single block guaranteed finality, I think as more stuff comes online, and it feels like it's almost like, you see that the bubbles at the bottom of the pot, they're just starting to get a little active, and that kind of slow boil, the simmer, and you're waiting. It just feels like it's going to be a full-on boil soon as everything comes live.
Patrick, I remember in January you were talking about like this is the best. We were talking about like we just need utility. We need to how can we use this thing? And I feel like 3 quarters later we're there.
Am I wrong to say that Ethereum, basically the majority of the people are sunk cost trap at this point if they're already in the system? Is that kind of one aspect to it?
I mean, there's some people who have like 300,000 ETH, right? So them paying like 0.05 on a transaction fee is meaningless.
Right. I mean, the thing with Ethereum is that what makes sense on Ethereum is if the transactions end up making you more money than what the cost is, then it still makes sense. There's still tons and tons of money in Ethereum, and the whales that are playing in that space, it still makes sense that they're still playing in that space. I mean, they're throwing around $50,000, $60,000, $70,000 in transactions. Who cares if you pay $10, $20, $30 on it or $100 on it?
How many Ethereum wallets are there? Like a couple 100 million? Anybody know?
Oh no, I think it's quite low actually. On Algorand, I think maybe higher.
So that's what I'm saying. Like it's very early in this game. Like we're all like discussing this, but it's like we're very early, and I feel like it hasn't played out like the way people think. 5 years ago, whatever shitcoin was, Cardano or whatever you want to call it. In 5 years, maybe it's number one. We don't know what's going to be in 5 years, but we're making our bet. Apparently, whoever's in this chat on Algo. So,
I mean, one of the things I say pretty much every week is that crypto in general is still a toy. When you look at it and through the lens of the world, like the amount of money in finance worldwide. I mean, there's asset managers that have more money under management than the entire crypto market. So
like BlackRock.
Right. So we're still playing the game. It's still anybody's game to win. It really requires the mainstream to adopt, and whoever the mainstream adopts will end up winning.
So here you go. There's about 800,000 active Ethereum addresses.
Yeah.
And Algorand
has... And maybe only 2% of Ethereum can afford it to actually use it.
So Algorand has 13.6 million accounts. But if you look at ones that have over 1,000 algos, only about 52,000.
And how many of those are active though?
Did they track that? But I'm saying just even having over 1,000 algo at all is only 52,000.
Right.
So which isn't much. But,
yeah. So we're early. Let's just say that.
The thing is all of crypto is still early, and that's what I think people still don't like. It was alluded to earlier. People don't get that. People talk about these huge market caps, and the reality is it's microscopic compared to the rest of the markets.
We haven't even captured 2% of the market yet.
Yeah.
Well, to change the subject, let's how about we move to NFTs? I mean, we're having all kinds of exciting ones pop up now. I got my new Saiyan ape, as you guys see.
Yeah, I love it. I love yours. Like, it's really cool. Like, both of you, I'm kind of jealous of this, like, the Super Saiyan and the Flamingo. Like, I look at them, I'm saying, shit, I really need to spend some money on that.
I've been spending too much money on NFTs.
They're like a Pokemon card addiction for me now.
Yeah, I hear you there. I doing my best to stay away as far as I can with NFTs, but I'm failing.
You don't have an algo on it yet?
I don't have an algo on it yet. That might change very, very soon. Just by the way, we are working on that NFT gallery that we're gonna release it open source for anybody to take, but it'll allow you to attach as many wallets as you want, organize them by custom tags, be able to actually have filterable views, everything of that sort. Also have the ability to transfer your algos directly in the gallery itself, or not your algos, your NFTs, and then also, of course, like safe swapping, I think is what Rand Gap Labs or Rand Gallery calls it, but the ability to automatically using a smart contract escrow to be able to transfer a NFT to somebody else for a predetermined amount, either a different NFT or a amount of algo, just to make sure that it's a safer transfer.
Zest Bloom, hopefully the next week. Is Ryan on here? I thought I saw Ryan on here earlier. No, I guess not.
Yeah, I'm excited about an actual auction house. Period. That's going to be a lot of fun.
Has anyone used ArtSquare?
I haven't even heard of that.
So I bought on artsquare.io. I bought a couple hundred shares of a Damien Hirst painting that's currently, I think, on display in Italy.
Yeah.
And
yeah, that's a really good platform.
And now I can sell each share at 3 times what I sold it in like a week.
Wow.
Wow.
So the painting went from it went from a 4,000, so it was like 4,000 shares was the digital art shares that were available, and now the market cap of the painting is 12,000 shares.
Wow. Well done, my friend. I was thinking about it last week. I checked like the different artworks, and yeah, congratulations.
Yeah, thanks, man. And you can, I mean, I'm just throwing this out there, and I don't even know still how to use it completely, but when they list a new painting, it's like immediately available or on the exchange. And so if you do it early, I think all of them are up. There's one that's not. There's one that's just flat. One's up 4.17%. Another one's up 200%, and another one's up 20%. So it was fairly easy. I don't even know if I'm allowed probably to even do this, but it was pretty easy. You could connect.
I like your approach, my friend.
Yeah, I mean, you could connect your wallet. No, you don't even need to connect your wallet. You just add funds. They give you the they give you the code, and I just sent my algo there, and it was immediate. And then whatever I sent, I used it to buy, and fees were low, and I thought it was like unreal. I mean, there's a Banksy, a Damien Hirst, an Andy Warhol up there. I don't know. I would check it out. I thought it was. I think it's pretty cool.
My only question is about the user experience. It's pretty bad. Like I send them like an email about the user experience, like logging, etc. Everything like is a bit like not optimal.
Yeah, it's a little clunky.
Yeah.
I just realized that I think I was not hearing several of you talking. So if I was talking over anybody, I apologize.
I didn't even hear you.
I didn't hear you.
Oh, wonderful.
But we hear you now. So you're buying an Andy Warhol or what?
No, I'm good. I spend way too much money on NFTs. As is. I need to stop.
So the Andy Warhol, I was actually thinking they should incorporate an NFT because I don't think they do now, and I think that might gain them a little bit more traction because you can't really hold the visual representation of your work. I think you got to log onto the website, or I mean, you could download, I guess, a picture, but I think it would be cool if they did have an NFT. I did check out the website. I did a piece on them maybe a week or a week and a half ago, but I hadn't realized that the value was shooting up that much. Danny, I think that was you, right? Was there any use case though for their ASQ coins? Was there any use case for that?
No, but I believe you can just transfer them, convert them back to Algorand if you wanted to sell your shares.
Nice. What an amazing time to be an artist, right? So you got like traditional art that's available through, Art Square like that, but then the NFT world where just your average person who is talented out in the world can reach the entire, universe basically, and we've all got access to it. Amazing
Okay,
time
so
to be in.
I'm looking at it right now, and the convert it says that my balance is locked. So who knows what that means and how long that's locked in. So I might want to do some research on that instead of just throwing money at a website to buy a digital art share of the painting.
Yeah, that sounds like a good idea, especially if it's locked.
I could see them becoming like the the Lofty of artwork though, where they, when Lofty comes out with a new project, it's sold out the next day. If they got a new piece on display or something, then if they got the word out properly, they could sell that out the next day.
I think eventually all art will be owned, or all physical property where you can own title to it.
Yeah, this will end up being the tokenization of everything, basically, like from object to art to anything. It's a great time to be, as we are, like pioneers in the field and watching that live growing, and like it's incredible. It's like we are in the beginning of kind of history, but we just don't realize how early we are, I think.
I was going to ask if any of you guys have used Loftly and what your experience was.
Lofty's amazing. They're killing it, I think.
Easy interface, easy to get your funds in, easy to own the $50 shares, however much you're comfortable with. You could spread it out down, but they've got like 20 some odd properties. You get a heads up the night before one goes live. Great interface.
Vesta Equity is about to drop a similar version. I think more of their properties will be in California because they are located there, and they have a lot of pictures of potential properties in like Palm Springs and stuff. But that might be another website coming out pretty soon. Or I don't know where it is, but I just remember Vesta Equity was another one.
Yeah, I've talked to that guy, Michael Carpensi. I did an interview with him not too long ago, and yeah, he's making some waves there. Rove, the RHOVE, that team is making waves. They're focused on multifamily units though and mixed use properties. It seems like they got a bunch of stuff on the East Coast, like Atlanta. They got some stuff on the West Coast, and then they've got that weird clump of properties up in like Ohio. And they have got they're in what they call like I think the testing the waters phase right now, but I bet they go live pretty soon. Quantum RE is doing something where they will sell fractional ownership of an existing home, which is pretty badass. So if you are a homeowner in Texas, and Texas has some really weird like cash out regulations, you can't access your equity easily with a loan, but you can sell 10 to 15% of your house to Quantum RE. They'll give you that equity right now, like cash. Actually, I think they distribute maybe in like stable coin or something. But it's like you'll get access to it right away, and
So
it's
we're
fractional
basically
ownership.
You're tokenizing a lien on your house, basically.
Well, we're
Exactly.
basically seeing the end of all reverse mortgages within the next 2 to 3 years.
Yes, 100%.
Crazy.
Yeah, I know that there is a top 5 lender right now in the U.S. that is will make an announcement probably in the next 2 weeks, something along those lines, that incorporates something along these lines. And lots of other small players are trying to get into that space now too.
On Algorand?
On Algorand.
Great. Now I'm going to leverage my home.
Yeah.
Never play with more than you can afford to lose.
Facts.
So people are complaining about 8%, of potential loss on option B, and then turning around and tokenizing a lien on your house. What could go wrong?
I mean, I'll leverage as much as
That's
my
just a
wife
great.
thinks we can lose. Me, I have completely different math to do
Well,
the
it's
thing.
just the same as what could go wrong with reverse mortgages, right? I mean, couple over the age of 65 needs income to facilitate and continue retirement as well as pay for medical bills.
Yeah, and actually, I mean, there's nothing that says they got to take that and keep it in, Algo. They can put it in Circle, or they can do, they can trade it for fiat for all that, is the case. So if I were them, like I said, taking it into a reverse mortgage, though, I'd throw it into governance. That's what I would do. But it's understandable if they want fiat, or maybe they want to fix up the place. So solar panels, for instance. What if you could sell 10% of your house, put in a pool and solar panels, and utilize the blockchain to track the lien on that, and then you could sell your house. There's the Quantum REs, I think, has got a 3-year balloon on it, or maybe it's a 5-year balloon or something like that. So you could use the funds that way, whereas you wouldn't normally have access to your equity in a property. Not that quickly, anyway. Solar companies love this.
The possibilities are endless. It's incredible. Like, we just need to really think of each field and find new ways to transact and to yield. And wow, that's a good idea.
Yeah, the disruption to some of these existing legacy financial systems is going to be huge.
Any of the OGs know what happened with Asset Block?
Yeah,
Not quite sure who they are.
I remember we had an interview, like we had like an AMA with them. We asked them questions, and I think my question there at the time, it was at the very beginning, it was about like international investors, and they were trying first to solve the US investors, and I think they couldn't solve that problem. But maybe they are working on the background, but I haven't heard of them since then.
Yeah, they're still listed on Algorand's website, but I reached out to the team and I got 0 response back. But I was just curious if anybody else knew.
Yeah, I wish we had more news about it, because that was one of the first exciting projects, and it was sad to see it like just disappear. And
there's another one called Pocket Properties that is supposed to come out in May of next year. It has something similar to Quantum RE, I think. So there's a couple more of those other small projects on the horizon.
Yeah, it's kind of the same with props, like that kind of disappeared a little bit, but their token is still it's still a verified asset, which is a bit surprising. But yeah, does anyone have some news about props?
Yeah, I thought they had announced that basically they were pulling their token.
Yeah, they announced that they're
securities
done.
years. Like next year, I think.
Yeah, you can see that the letter from the CEO is saying that the token was treated as a security, and because of that, it severely limited them what they can actually do with it. So they are not using it anymore.
Man,
I think that's starting like next. I think it's like next year, but basically they're winding it down. They're just
I thought they stopped.
Got nervous.
I thought they stopped immediately, and what it is that they're winding down the services over like the last years. Like I thought they're them themselves aren't using it anymore, but
there's still props transactions.
Okay, cool. Well,
but yeah, I mean, I think they just freaked out about. I mean, there's already like as soon as anyone wants to do a token, it's instantly a complete total nightmare, particularly if you're in the U.S. So yeah, I mean, doesn't surprise me to a certain extent that they flinched with all the rhetoric lately.
yeah, I mean, to me the whole they went the way that they believe that the SEC wanted them to, and and because of that, it's completely the SEC is like, well, that's definitely a security then. So so now you can't treat it like a normal token.
I think there is only Securitized that has all the regulation to really manage securities, and I don't know if many projects really work, many US projects really work with Securitized, but I think when you find yourself you're close to be a security in the US, you should really contact them first, because they have, I think, a special license that give them like much more like rights to deal and to trade and with KYC, etc. And I think they're doing an amazing job. I would love to hear Domingo here one day.
Yeah, but what it is that then your token is a security. So the only way that you can do anything is through Securitize or their setups. Like I mean, regular exchanges won't be able to actually have the token without, dealing with like what Uniswap is dealing with. It's the headache.
Yeah, the distribution is almost impossible, really.
Hey Patrick, you guys ready to make any announcements yet?
You're killing me, Smalls. No, maybe soon.
All right, I wasn't gonna let a one of these talks go through without somebody saying no comment.
So you're working on something?
Yeah, myself and three guys as co-founders started Transaction Lab, and we're starting something exclusive for Algorand.
And NFTs, right?
Say again?
With NFTs, right?
No.
What? One of these days, one of you will slip. I know it.
Well, there should be something. There should be something before. There should be something before Decipher, I would hope, but we'll see.
Awesome. Is your whole team going on Decipher?
All but one. Yeah, one's expecting a baby like right around Decipher time, so they're not attending. They'll be there virtually.
Cool.
But three of us will be there. So we already got flights booked, tickets, and everything. Looking forward to it.
I'll be there.
Awesome.
I'll be there.
Yeah, I'll be there too.
Can someone tweet live updates?
I got you.
Thanks, man.
Anyone hear any updates about? I heard that Algorand is doing something with helium, which is another project that I'm invested in. Some talk of maybe wrapping the helium token using Algorand. Is that still going on?
I haven't heard of that, but that sounds very interesting.
I would assume yes. If you didn't hear it the other way.
I think isn't it something like where I think there's a relation between like the Planet Watch, the Planet's tokens, and I think didn't that get switched over? And there's
maybe
it's like the helium
kind of thing.
Helium miners. I think it's like there's a borderless angle there. I think if Daisy is here, I think can speak to that. basically, I think Daisy was running a Planet Watch sensor and knows all about what's going on there. But I think there's some relation there between the helium miners and Planet Watch sensors.
Yeah, he runs sensors for both.
So I'm giving a talk at Decipher. What do you guys want me to talk about?
DAOs.
Speaking of DAOs, Chris McCluskey, how far are we from Anthill DAO?
Hey, what was that? Sorry, I was just doing something here.
I was wondering if you could share anything about Anthill with us.
Yeah, I can't share anything too exciting today. We're building a fantastic team and working on. I really want to be confident in what we're building before I start kind of saying details. But we're doing interesting things around DAOs, like you say, infrastructure around that, a lot of thought around governance across a lot of different areas of Algorand. And yeah, I wish I could share more. I really do. But I'm hoping in the next few weeks we'll be able to share some interesting stuff and start getting the community involved in helping, because that's kind of one of the key tenets of a DAO is anyone can help.
Chris, can I ask you questions about DAOs, because I'm still learning about it and I'm really interested.
Sure.
Yeah.
The other Chris. There are two Chris. There are two Chris now.
One thing I just want to say as well, and I'll let Chris, the person that's focusing 100% on DAO, to answer any questions. But we put a proposal in for the foundation to build a generic DAO infrastructure so that it'll be easy for anybody to stand up their own DAO just by what we.
I can't tell if it's me cutting out or others.
Yeah. I think Chris got disconnected a little bit. Can you say that again, Chris, please?
Oh, okay. What I said is we submitted a proposal to the foundation to build a generic treasury DAO infrastructure, so that it makes it easy for anybody to stand up their own DAO. So hopefully they'll accept that, so that people can create their own DAOs really easily on Algorand.
Can I ask you questions about it, please? Like, how many wallets can be connected to this infrastructure? The maximum amount?
I mean, there's no maximum. Why would you think there's a maximum?
Oh, wow. So, like, literally, you mean we can connect like 20,000 wallets to it, and each one could have a role?
Yeah, well, I mean, really, it's really up to the way that we're actually structuring it. Is that it's the first one we're going to release is very simple. You vote with a governance token, and based off of actually a proposal system, and anybody that actually has the token has the ability to vote. Eventually, we'll get into the ability to build custom DAOs where you could either do like quadratic or many other things. But our goal for the very first thing we release will be a multi-token treasury with the ability for the DAO to decide what to actually do with that treasury based off of a governance token.
And how many people, how many treasuries can you set up in your DAO?
It's going to be an open token treasury, so that the treasury itself will have as many tokens that. I mean, I think the actual technical limit is like 1,000.
Wow.
I think is what it is. But I would have to double check.
And does everyone, like any member of the DAO, vote? Like that can be like 10,000 people voting on one treasury?
Yeah, exactly. So it's anybody that actually holds the governance token will be able to vote on the proposals.
Wow. I might. When do you think that will be available? Actually, because I'm thinking about Fame. Like maybe we can just put everything, like really do it like put fame completely on it, and I get out of the tokens control.
Yeah, so I keep cutting out, so I think I have bad connection or something of that sort. But the idea is that the reason why we're building it is that we have a need for a DAO. And the need that we have is and the reason why it's a multi-token DAO is that we want to be able to give out multiple different types of tokens to a proposal rather than just one, because there's a need for actual stablecoin payments, potential algo payments, and then potential governance sharing as well. So want to make sure that the DAO has the ability to govern multiple tokens in a single treasury.
And can we have like different type of like members, like a smaller group that can have more power than the second level, like different level of powers?
We're not building that in to start because I want to build a basic DAO first. But the thing is, like, the idea is that we're going to open source it, so it would be a good foundation for anybody to build their custom functionality that they would want on top of it.
Wow, thank you. That sounds. Do you have an idea like before 2022 or?
I mean, it really my estimate was to actually build it all out would be around 4 months worth of work. So it really depends on when the foundation decides to actually accept it.
No, thank you. Well, I'm so excited about that because that would save a lot of work for us actually.
That's the idea. I mean, the thing with DAOs is that they're really only super powerful when you can actually launch a DAO before the organization. Because when you launch an idea from a DAO, it has no jurisdiction. The jurisdiction is the blockchain, and everything is P2P. So there is not a governing rule. It is actually everybody coming together with governance. So it's important in my mind that an infrastructure like this actually exists, so that DAOs can exist as a DAO from day one rather than exist as an entity from day one and then eventually flows to a DAO. I think that doing that causes a lot of regulation issues.
Yeah.
Chris, do you agree with everything I said? You're more deep into DAOs than I am.
Yeah, I was cutting out a bit. Yeah, I missed some of that.
So then, yeah, Chris 100% agrees with me. I mean, we both have sweet beards and both named Chris, so pretty much everything he says or whatever thing we say, we agree 100%.
Yeah.
You know what I was thinking, Chris, both Chris's. I was thinking actually, why not decide on the Fame DAO, like just in one of these, like using these sessions to decide all together how to put it and to just like launch it with your open source DAO. We can have the debate here about all the points, and I can just present you my first idea, and just everybody brings a modification to the DAO, and we launch it. What do you think?
Sure. Chris, will Ant Hill DAO be completely open source and free to everybody to use?
Yes. Yeah.
Cool.
That would be a cool way to start it.
Yeah, and I'm guessing that Ant Hill DAO is going to have completely different functionality too. So the good news is that, really the way that I look at it is that the more the merrier, because people will want different functionality. They will want different things. So the idea is that having multiple different frameworks out there to make it easy to do is important.
Yeah, 100%. I feel that almost with every niche of projects. You can't have too many AMMs at this stage, DAO infrastructure, lending and borrowing markets. There's so many different nuances that, really focus a project in to a certain group of people.
totally agree because, like, I'm more personally like fond of like Tiny Man's design than I am so much for like like Algo decks, for instance.
I was gonna say, whoa, whoa, whoa! What are you about to say there?
Yeah, I thought he was gonna say it too.
I really like Tiny Man's way more than the stuff that Chris is doing. Bold, love it.
Bold strategy, Cotton.
How is your decks going, Chris?
It's going really well. Everybody, like, the issue is like I think everybody knows by now that Reach isn't the one launching the decks, so we are building it in a very generic way so that when the entity is ready to launch it, we can easily apply their colors and name and everything too. So we're kind of building kind of in the blind as far as, which is why I'd be okay with you not liking the style yet, because there really is the lack of style. Yeah, the blockchain portion is done. The interface is being worked in. I've shown a few leaks of swaps happening. I would assume that probably within the next week or two, knock on wood, I'll let some people actually play around with on testnet, give their feedback. We're waiting for a feature in Reach called API Participant to help with a certain type of interface.
Wait, hold on. You want to do testnet first?
Yeah, usually that's usually a good idea. But yeah, so the big question mark that I have right now is we have two major features that we want to launch with the DEX. One, adjusting large swaps. Like right now, this is actually a big problem with AMMs. If you do a large swap, you can actually get killed by the simple algorithm. So we have a plan on how to actually fix that. Also, we're looking at a way to implement condensed liquidity pools on Algorand. And a couple of those things require a feature that has not been released yet with the AVM. So the main question that we're trying to think of right now is, like, do we want to go to production without those two major features, or should we wait until those features are available to actually do a big splash and try to actually bring people over from other exchanges? Because the large swap problem that I mentioned is actually a very big problem on Ethereum and Uniswap. You can actually read a paper about it called TWAAM by Dan Robinson of their way to solve it. We're not solving it in the same way because we don't have the gas problems that Ethereum does. So we have a different way that we want to actually solve it. But yeah, so that's the big question right now is, like, when do we launch early with less features, or do we wait until the bigger features happen and launch then? And the reason why it is actually an important question to ask is just because of the immutable nature of blockchain is that if you do launch, it's launched forever. There's no like upgrading the contract with the new features. We would launch and then maybe a couple months later launch completely new decks with these new features. So that's the type of stuff you have to think about when you're thinking about building blockchain applications. Is upgrading and adding features is a very something you have to think about really hard.
Interesting. So, yeah, there's so much to go over there. So, you're going into testnet, and this is for the Algorand instance, I'm assuming?
Correct.
Are you going to deploy elsewhere?
Yeah. We have the ability to. My main thing is, like, I really want to actually start with Algorand and get the user experience happy. I mean, because the whole benefit of Reach is that you can actually launch on multiple chains without changing the code base. The other thing I didn't mention here, but I mentioned earlier, is we're also working on a cross-chain wallet, so that you can have a single browser wallet for all of the chains that Reach connects with. So you don't need to worry about having different wallets if you want to use it on different chains. So we might actually wait until that is finished before we launch on multiple chains.
Interesting. So you would launch the Algorand instance first, though, for sure.
Right, exactly.
Yeah. And when you mentioned, so the V1 will be like a constant sum or a constant product, like a uni V2 style, right?
Exactly.
And then your V2, you're thinking of doing, you're not sure what that will look like. You're trying to tackle that problem, and you're looking at solutions like similar to uni V3, where you can have confined liquidity in like a certain range that's specified beforehand.
Exactly. And the question is that, do we wait until those features are done to actually release just one, like V1 on production, or do we actually have two different AMMs? That's the main question.
Yeah, because uni V3 had to do a separate, and I haven't played with it on Optimism yet. I think it would be beneficial to have on something like Algorand. With it would be easier to manage your position, right? Because it almost requires.
But that's not really what I was talking about. The large trade problem is actually what I was really talking about that get people excited. Because I don't know if you know or not, but if you actually try to do a large trade on like a large percent of trade of a liquidity pool on an AMM, you can actually lose a lot in the actual algorithm itself. So the current way that people do it is that they split large trades into multiple trades to let the AMMs recover based off arbitration. So they split it up, and then you pay gas price every single time you do that. And it's also there's increased amount of potential issues because there's a lot of moving parts. So what the feature that we're actually looking into is building a secure automation of like a limit buy sell on through the client side, so that what you'll be able to do is be able to set the how much you actually want to trade. It will look at the how much liquidity is in there, and it will determine if it would be smarter to split the trade into multiple and allow you to sign a transactions to be able to automate that process based off of the actual current price of in the AMM.
That's really intriguing because I know which problem you're talking about because I've almost experienced it once on Uni when I tried to sell a whole bunch of liquidity at once, and then I saw how much I was going to lose in value from that.
Right.
Yeah. So basically, if I understand the problem correctly, you have too much slippage and you move the price too much.
Exactly.
And you would break it up because you would let the arbitrage traders bring it back to the index price, let's say. So
exactly.
You'd basically automate that easing into it and giving it, I guess you would set like a parameters you'd be comfortable, like some, I don't know, 3% of your initial price to let it ease in at that and just let arbitragers bring it back around that threshold.
Exactly.
Yeah, so that's sweet.
So you guys getting all the alpha.
Yeah, that is really sweet. And normally, like on Uni V3, you could do that by providing liquidity and setting a certain range, but then, you're waiting for that point to reach that maximum range before you could pull. But yeah, that's a sweet setup you got going on there.
Yeah, especially with unlike kind assets, right, where you have to retain a normal bonding curve rather than something like a curve where they're like kind assets, and you can be more interesting with the curve and kind of pack liquidity around the 1-for-1 zone. But yeah.
Right. Exactly.
And especially with coins with low liquidity, that's going to come really in handy.
Exactly. But so this is another reason why it's important that there are multiple exchanges, both centralized and decentralized, because like the funny thing is with AMMs really don't set price, they follow price. Just because of how everything actually sets. And if you don't have multiple exchanges in the world, that they don't work as well.
Yeah, but I think if the majority of the liquidity was in AMMs, they just end up being the price discovery mechanism, and then it actually makes more sense to use like their TWAP oracles, for instance. Like they'd be more meaningful if they were the primary source of like price discovery and volume.
Right. I agree, but we'll see if that's actually the case.
I feel like it's inevitable. No, like we're heading that way.
I mean, I got the same hope as you do.
Yeah. Yeah.
But like the main issue though is that we have to realize is that the mainstream majority hasn't come into the space yet, and the mainstream majority loves custody. So you're going to see a lot. Like, yes, there's going to be a lot of people that are in the space right now that love holding their own keys, love figuring everything themselves out. But I bet you when the mainstream comes into the space, they're going to lean more on user experience and services, which will centralize a lot of stuff.
Yeah. We need your wallet to be super easy and awesome to use.
Agreed.
They would probably just ask their banks to deal with it and just buy through the bank like they do with stocks.
Yeah, I mean, it's like we can have as much hope that we want as us crypto degens actually have, but my mom and grandma, I don't think that they are going to be crypto degens. But I'm okay with that as long as the rails of everything are decentralized. There is room for centralized service providers that sit on top of these rails, and because it's a complete spectrum of comfort in the world, and that's okay.
Yeah, that's a great point. My mom's been trying to buy a Zed-Run racing horse, an NFT, for like a week, and it made me realize how difficult the UI or like the UX is in crypto right now. It's so hard.
Like about a month ago, I was using the ETH Explorer to activate a contract directly from the function calls. Like, I don't think most people will actually be doing that.
Yeah, you have to sometimes. It's the smoothest.
So as I was saying, a lot of very exciting things coming. Everything from Anthill DAO that's going to fund the world, right, Chris? And then the NFT stuff that Patrick's working on. It's really it's really exciting. And then we're Game Jam Protocol just leaked another image, which I'm sure you're all super excited about. It's a pretty cool one. But and then the DeFi suite as well.
You got me, Chris. I mean, we're working on something on BSV. I think BSV is the future of all crypto.
Shame on you for even making that joke.
I'm sorry. I meant ETH Classic. Yeah, ETC.
That's better.
I need a 51% attack it right now. Give me a few minutes.
The one true Ethereum.
Doesn't it cost like $800 to attack it? Something like that. It's just ridiculous.
Yeah, but that hurts the game theory. Game theory production.
Yeah, we've been running 3 hours this morning, 2 hours and a half this evening. We spent the whole day. This was a long algo day and a really cool one. And it's great to have you both together, like Chris and Chris, like around DAOs. I hope we will have that kind of dialogue again soon. It's very interesting to learn from you.
I really appreciate you being on here. Like, as far as nodes go in the Algorand economics, you spend a lot more time in that than I do. That's for sure.
Oh yeah, Patrick around the protocol itself. Yeah, definitely. It's cool because we kind of have slowly building up each one of us is focused in some aspect, and we are bringing a lot of knowledge from each one of us, which is, I think, very, very interesting because each one of us can learn from each other. I love it.
Agreed.
I
All
feel
right.
like Chris is.
I'm going to tap out, guys.
Yeah, I feel like you are. Yeah, it looks like the end of the session. What do you think?
I think so. Unless there's a last question. that I can answer.
Yeah. Any question or remarks or
vote B.
comments? Anyone?
Hashtag vote B.
Hashtag what?
Hashtag vote B.
Vote B. Yeah. I honestly, I'm like, personally, I vote B, but I definitely see the actual the A as well. I'm similar to what Patrick is saying, where there's a lot of reasons for both A and both B. The difference is that I'm usually somebody that makes a decision and might change my mind later. But so I'm currently on side B, but I'm not even actually a governor yet, so I shouldn't even talk yet. But when I become a governor, maybe my mind will be changed.
Yeah, I started with A, and now I'm thinking of B a bit more. Especially since, yeah, we are so committed, and actually what Kwame said this morning, like, really convinced me, like, maybe B is a better option for me. But yeah.
I feel like this should be split apart into different proposals. Like the front loading of, like, the distribution of the rewards should be a different proposal than the slashing mechanism. But I don't think, I'm leaning A personally. I'm going to be voting A. I think the 8% slashing will probably induce less participation and from individuals, and I think it would be better to have more off the bat, and that could be something, the slashing could be explored later, maybe, is the way I'm kind of feeling about it.
I mean,
yeah.
I agree. I think that's I definitely see that. I don't have an answer. I mean, I will make a choice and I choose B, but that might change before I actually vote.
Yeah, and I also worry that the option B, the fact that you, like, it looks like it could deter people just from a tax perspective, having to move 8%. Like, that could deter people just moving that alone, I think.
Yeah, that's actually a good point around taxes. Like, one thing I would love, and maybe this is actually going to be possible, actually, but make it an option where you can choose A or B when you decided to be a governor.
And just have rewards weighted B or something?
Well,
Or,
someone suggested, actually, if you really want to kind of, quote, abstain while still getting rewards, then just do 2 wallets, 50% A, 50% B.
Yeah, that would work. But I mean, the thing is, like it depending, like, why not have a different options where you can say, you know what, I'm going to go the A way because I'm worried about the slashing, and but the people that are going the B way, they can go the B way, and with the potential of having a higher reward.
Chris, we don't want your forks.
It's not a fork. It's called options.
You're taking. Then you have the Algorand A chain and the Algorand B chain.
That is not how that would work by any means.
Yeah, it's a fork on the governance, kind of. Two communities.
It's not a fork on the governance at all. It's just a like, it makes it variable.
yeah, I do think they should have an option C in every single vote, or always an option to deny both, just regardless of what the proposal is.
Yeah, that's a really good point. I really like that. Thank you. That's a really good point. We should have that, because if we don't agree with any of them, like, it's like in voting in France. Like, if you vote with like, you smash the paper, like, that's recognized as, I don't like your positions. Like, I don't like any of the choices that have been given.
I mean, isn't like protesting the vote like that's like expected, isn't it? Like, you have to protest.
There is protest everywhere in France, like every day, everywhere. Even my students protest in the classroom.
So basically, I don't. So basically, the I don't agree with either choice would be the grumpy cat vote, basically.
Yeah, that's basically it. Like, we love to protest and to complain, and yeah.
All right, guys. Well, now that Patrick accused me of trying to fork Algorand, I'm gonna go.
I thought it was fantastic. I thought it was a great troll.
All right, guys. Well, until next week, you know where to find me.
Yeah.
My DMs are open. So.
Thank you so much, everybody. I think, yeah, we can have a break and have some food and try to have a life or pretend to have a life outside of blockchain and Algorand. And talk to you soon, my friends.
And pretend to have a life. I agree with that. All right. See you guys.
Yeah.
Thank you. Take care.
See you guys.
Bye.
Take care.
Thanks.
Bye.
Bye.
Bye, everyone.